Good morning and happy Monday, traders. I hope everybody's doing well. I am taking a look this morning at the Emini S&P 500 futures /ES in Thinkorswim, which is the platform that I use. If you haven't yet, please subscribe to my channel and hit the like button. And if you have any questions, please put them in the comment section below and I will hopefully get to them shortly. So, as you know, I like to start my morning by looking out at the longer time frames. I started trading last night. Just took a couple of positions in /ES. I think I made $37.50, which is frustrating and aggravating for me because all weekend I studied risk management and placing more appropriate stop losses, and I still got nervous and moved my stop before I should have on the first position that I took last night, and sold that first position with a $12.50 profit just before it dropped down and would have been a $175 profit, which is something that I do quite frequently. But I want to make sure to talk about it on the channel here because I think that it's something that that a lot of traders do. We get out when we see that we're making a little bit of money, and sometimes we hold the positions that are losing longer than we should because we're so afraid of losing the money that we jumped in with, and we cut out before the big move happens. And that's definitely something that I am working on lately, because I've started tracking when that happens, and I definitely lose more money as a result. And if I were to just do like some people say, place my order, put the stop in an appropriate place at either a recent important high or important low, and then go take the dogs for a walk, my portfolio would look a lot better than it does. But you know, this is a learning process, and I appreciate you guys being here with me through it, and also the support that I get from some of the team in the LPP group. So big shout out to you guys. All right, so here we are at the 4-hour chart on /ES, and as you can see, I've got the TPO profile pulled up here. We've got ES going up in this channel for quite some time. As you can see, I took a position based on its placement here near the top of the channel, and in an important area with the Fibonacci level at the most recent high. I've got hypothetical zones drawn into some of the low order flow nodes, but I didn't draw them on this time frame, so that's why they're not lining up here. Realistically, I would hope, which is a terrible strategy, to be able to catch /ES on a downward move into one of these previous areas of demand. That would probably take a news catalyst today to get us to those points, and of course we can't predict those things, so I've got my short order in based on the price action that I saw this morning, and its placement at the top of this channel near the Fibonacci level at the top of a zone that it's bounced down out of a few times recently. We're not sure if that's going to work out or not, but I'm in the market. So this is the 1-year, 1-day chart on the Emini. As you can see, it took a dive down here. I think this was coronavirus related. Let's look at the date. Yeah, I think so. But came down into this demand zone and made somewhat of a double bottom before shooting up to the current new highs. Hang on before I hop out of here. So I think there's some justification for a move a little bit higher, or also just sideways price action during the day. Definitely could revisit some of these areas briefly. Dial that down to the 1 hour chart. This is just kind of my process. I like to start at the 184 hour and then back myself out to a year, depending on what I'm looking at. Usually on Sundays, I might look at the 20-year or 30-year or 40-year charts just for the fun of it. But also to see what the technical patterns are looking like on those charts, how they've moved in the past. And I've mentioned before, it doesn't usually take me nearly as long when I'm just doing it on my own, but for the sake of the video, of course, I chatter a bit more than I normally would. So I really am interested in this hypothetical area here, just because it seems like so many orders have already been filled in this area. And as you can see, I drew in some Fibonacci levels here on the smaller time frame. I don't really use them religiously, if you will, but because so many traders out there do, I like to pop them on the chart periodically. I usually will add them in on a much longer time frame. And then I'll pop them on to a smaller time frame chart to see if the price is respecting those areas at all. And if it is, I'll leave them up until they're no longer being respected anymore. Pop one more hypothetical zone, or maybe two. Let's do three just for the heck of it. Why not? This would be an amazing move today with my short position, but that would have to mean that something rotten happened in the world, and I'm not super excited about that. I hope that everything goes well and that my short position fails completely. Let's look at the 30-minute chart. But as we can see, forward/ES, the market has just been running up and up and up and up for quite some time. So I could get stopped out of this position. We'll see. I'm hoping just for a brief dip down into this zone before it rockets to the moon. And we're at 4:03 a.m. Mountain Standard Time. So plenty of time for that to happen. And a lot of justification for that to happen as well. As you can see, we're now on the 5-day 15-minute chart, and as I primarily work in the pre-market, there are a lot of downward price movements during this time, and I'm not going to try to explain why. There's a lot of different reasons that I have been given as explanations, and you can research those on your own. I am not a market wizard. Okay, so let's get rid of this study set, get back just to my OBV and RSI. So as you can see, I entered here, and my reasoning for entering here is that we had just made a lower high and a lower low. We're moving around in this wedge. This here is an engulfing candle at the high on the Thinkorswim platform. Those don't necessarily get respected all of the time, but I find them to be somewhat helpful. On the larger time frames, they seem to be a bit more important. Um, we had one touch up here in the red on the RSI, and when I bought in, it was looking like we were going to drop down and stay down below the 50% level on the RSI, but not entirely sure now. But as you can see, since coming up from this demand zone, we've been seeing the price action move in a trading range here between these two zones for, what is that, 1, 2, 3, 4, today would be the 5th day. So I think that there's a good probability that we will see some action down into this area, which is why I decided to take a short position. Hopefully I will be able to close out of this short position before the market opens, and then hop into a longer intraday play on the upside that I don't have to monitor as closely. I feel a bit more comfortable holding a long position with a stop in place in the E-mini, because it has been on an uptrend on the 1 year, 1 day for such a long time. And of course I can still get stopped out on those, but I feel like the probabilities are better on that. So anyway, let me talk a bit about how I decided to pop back a little bit more about how I decided to take the short side on this. So we have a doji here at the top of this this triangle. At that point, it was looking like we had a downtrend starting. I knew there was a possibility that it wasn't going to push past. There's a lot of resistance right here at this point, because it came up into this level and has just touched it several times over the night. It did hop over. So last night I had considered not closing out my position before I went to bed. I was really hoping that this was going to take a dive before I went to bed last night. Didn't happen. It did get a little bit lower than where I sold out. But my stop last night was placed here at 3389.78-ish. And had I kept that in place, as you can see, I would have ended up closing out. And I think that it's fine to adjust our plans after we're in a trade, depending on how we're feeling. And I just didn't feel like the price action was strong enough after I bought in to cause a dramatic drop overnight. And I was right. And I'd rather make 35 bucks or 45 bucks or even $12.50 than lose money. So as you can see, we popped up here to 33.92.5, and it's been downtrending a bit. There's a definite possibility that it's going to treat this like a little double bottom. It's not exactly even, but it doesn't have to be. Double bottom, pop out the top of this triangle, try to make a little bit of a breakout. I would be surprised if it did hit up over this high before the market opens, but there is a possibility. And just because I have my stop placed up this high, it doesn't mean that I'm going to allow that stop to get hit. That's something that I've done in the past. Just kind of sat here and watched it while the price climbed up to my stop loss, or even moved my stop loss up when the price action wasn't going in my way. And that is just a great way to lose money in a completely idiotic manner. So that is no longer a practice that is a part of my life. Don't move your stop losses. If the market is not going in your direction, consider selling your position and joining the other side. You will end up making more money that way than you will moving your stop loss until you're into a place of fear and desperation and you sell out just as the market turns back around and goes the other way. So identify what your risk point is when you enter. It's a really good idea to take a look to the left on your chart to see what has been happening. Here we are at an all-time high. We've been making lower highs and lower lows. I thought that this was a good point for it to turn back down. It probably would have been okay for a scalp if I was able to take a bigger position size. But this is my smaller account where I'm trading futures, so I'm actually only able to take one position in one contract in /ES right now with a little bit of wiggle room. So my decision to enter was based on those facts. I took my position here and I calculated before entering the position what this amount of risk would be, because this is where my stop logically needs to be based on the research that I've done, and considering that this could play out like a bit of a double bottom, which would mean that this handle could shoot up over the top of this triangle, either take out my stop in the process or develop into a trading range, trend down, trend up, whichever. But as I said, if it looks like the market is heading in this direction, I'm going to go ahead and bring my stop down and just get out, and then make a decision about what I want to do after that. Just quick overview of the other futures that I'm taking a look at. I'm not really comfortable taking a position in natural gas or oil. I think we're going to see another decline in natural gas, but as you know, I've been generally bear biased on natural gas for a while, particularly because the price has been trending down for so many months. But excuse me while I pull up the next contract spread. So we've got 9 days left in this natural gas contract, and the coming months are still trading higher than the current front month. So I don't know if that's artificial and we're going to see another divergent low coming down from this area into possibly the 1.7s, 1.6s again, or if the coming months prices are actually reflective of the fact that some of the suppliers have decided to, or producers have decided to cut their production down because of the low prices right now. I'm really not going to try to speculate on that. Anytime I do, I end up losing money. So I'm really developing a very heavy focus on trading the price action that's in front of me and being aware of the recent price action, but not, and the fundamentals, but not really, not developing a bias and then trading off of that, because I also lose money there. And losing money is part of the game, of course, but I would like to minimize it in any way possible. So those are my thoughts on oil and natural gas. I'm just not going to touch them until I see some heavier movement in one direction or the other. One thing that I have been toying with a bit is the 10-year U.S. Treasury notes. And I actually had an order, a limit order in to buy It doesn't look like it would have gotten triggered because I think that I had it set down here right on this trend line that I've got drawn. I've traded the 10-year note a couple of times recently, and I really do like the way that it moves. Um, let's take a look at the volume. Oh, it's not. What even is that? Okay, it's another treasury note. Um, but take a look at this volume. Last night, when the market opened on Sunday evening, I think that it was up to 38,000 or 50,000. Anyway, trading quite a bit heavier volume than most anything else that was open last night, and that is part of what is attracting me to trying to trade the 10-year notes. And as you can see now, it also has the highest volume of anything else up here. Not a lot on the active trading ladder right now as far as volume and orders. I need to learn more about active trader volume and how that correlates over to order flow. I'm still up in the air about whether or not I want to pay for order flow data from a third party or not. It seems like that is something that a lot of futures traders are doing, but also many people don't use it at all and seem to trade just fine. So we'll see how I move with that. But what I really like to see is what the price action is doing around big chunks of order flow, and use that in conjunction with time and sales and the price action candles. But yeah, so had I bought in here last night at 130, I don't even know how they record these. You have to excuse me. Something 360 degrees. It's not really important to me to have the terminology exactly correct, so please forgive me for that. Anyway, I'm going to go ahead and set a couple of orders. I do really like the price, not orders, excuse me, alerts. I really do like the way that the price moves. I'm still learning how the patterns play out. I had initially almost bought in yesterday around this level, and I could have made a quick scalp profit. The margin required, excuse me, let me take a sip of coffee. I went to bed late last night because the Emini wasn't moving as quickly as I wanted it to, so I was up an hour and a half after my bedtime. So the margin required on the T-bills is quite a bit lower. And as you can see, it still has a pretty high dollar value per degree or tick or pip or whatever they call it in this one. So I was considering buying in here, but I wanted to see if it was going to take another leg down and make us a double bottom at the bottom of this trading range, this triangle, before heading up, and it did. But as you can see, that happened at 1 o'clock this morning, and I guess what I could have done was put a stop limit order in there to pick that up with an OCO bracket, but I'm just not very comfortable having orders filled while I'm sleeping or holding overnight in general. Usually I do a little bit of it here and there, and I've definitely made some good money using that strategy occasionally, but I've also lost money, so I'm still sorting out how I feel about swings. But soon I intend to start trading the 10-year notes quite a bit more heavily, and I think that because it's such a quality item, I will probably spend a bit more time here than I do in oil and natural gas in the future, unless I just see some really great opportunity. Let's hop back over and see what the E-mini is doing, and then I will probably cut out. I was really hoping we were going to get some nice price action while we were on the video. As you can see, I am now down 37.50, but it's showing zero because I was up 37.50 from my trades last night. Really looking for a move down into this area before we bounce up to the sky. No way to tell whether or not that's going to happen, but we shall see. All right, I'm going to cut the video off here. I hope you all have a really great day trading. Remember to manage your loss. Also, these videos are not intended in any way to be recommendations on what or how you should trade, or even that you should trade. I think that realistically most people should not. The risk involved in day trading and swing trading futures or any other financial instrument is substantial, and it's probably a good idea for you to sit down and chat with a financial advisor and really learn about the risks involved and find out whether or not it might just be better for you to hop into some index funds and enjoy the ride. Oops, sorry, squirrel. I get really distracted very easily. I hope everybody has a great day, and I will chat with you next time. Bye.